And welcome back, and good morning. 513 here, 413 there in Chicago. All right, the big story sending futures higher this morning. Hong Kong's chief executive, Carrie Lam, says that she may permanently withdraw the planned extradition bill that sparked the protests. Dow Jones futures right now indicating an open of about 233. If that happens, we would gain back not quite all, but most of what we lost yesterday. But should the markets really be reacting this way to this news? Joining us now is Michael Tyler, Chief Investment Officer at Eastern Bank Wealth Management. And apparently, Michael, you've got to be an East Asia strategist, or at least a Hong Kong strategist, to understand the way the U.S. markets are reacting these days. Is that the way it should be for American stocks?
Well, I don't really see that there's a tremendous impact on the U.S. Either way. But having said that, political unrest is not good. And to the extent that Ms. Lam's ability to withdraw that bill helps calm markets and calm the economy in Hong Kong and in China, that would be very positive. And we'll see what happens. I don't think that's the major thing that's going to be driving markets. It hasn't affected markets on the downside. I don't think that in the U.S. it's going to have nearly as big an impact on the upside. I think the Brexit deal, I think some of the things going on in the U.S. are more likely affecting U.S. markets.
Well, we had the violent protests over the weekend. Stocks fell yesterday. I mean, the ISM number was out there as well. Now we have this. The Hang Seng's up 4%. But it sounds like you don't believe that there is that much of a direct tie. You think that maybe Brexit is more important than what's happening in China, or at least Hong Kong?
Well, the stuff happening in Hong Kong is important, but it's not going to affect the long-term movement of markets. So, yeah, they went down on Monday. They go on Tuesday, rather. They come back up on Wednesday. That's short-term moves, and where do you start? You're right where you left off before the weekend. But what happens in Britain, by contrast, there is a big deal, because if there is a hard Brexit and Britain's economy goes in the tank versus if there's some kind of a deal or if there's no Brexit at all, then Europe's economy, Britain's economy can come out very differently, and that does have an impact on the U.S.
Brexit, obviously, all the stuff that, and I don't want you to become a UK political strategist as well, Michael, because if you can understand that, you're a better man, certainly, than I am, at least. Does the possibility of some kind of Brexit either delay or a permanent shelving, which is the way it looks like it's headed, should that help the U.S. markets longer term, or maybe just give us kind of a short-term adrenaline shot?
Well, I think the best possible outcome would be to eliminate Brexit completely, and for the UK to have another referendum and say, you know what, we've seen what it's going to look like, we don't like it, and we're back in the EU to stay. That would be an outcome that would send markets much higher, for the simple reason that then the existing trade rules, trade flows, population movement, all those good things would continue unfettered. But if that doesn't happen, if you get a hard Brexit with no deal, then okay, it's going to really hurt the UK economy. No question about it. It's going to make the pound much lower. Bank of England will have to inject a lot of liquidity. That will lead to some inflation, perhaps. It'll be painful in the short term, but the UK is resilient, and it will come through over time. The middle scenario is the challenging one of what happens if we just agree to another 6 months of negotiations, because the EU doesn't, frankly, have a whole lot of incentive to negotiate. Britain isn't as important to the UK. Britain isn't as important to Europe as Europe is to Britain. And that's the scenario that has a lot of CFOs and a lot of corporations worried, because they don't know what the outcome is going to be. They can't plan effectively.
Are U.S. stocks undervalued or overvalued right now, Michael?
I think U.S. stocks look reasonably decent right now. I wouldn't say they're cheap, but look where bonds are by comparison, and there's more value in stocks than in bonds. Earnings growth is going to have some challenges. The second half of last year was very strong, as you may remember. So looking ahead, the next 6 months of earnings comparisons will be challenging, and that may keep the market, call it in place to maybe up a few percent through the year end. But after that, assuming we can avoid a recession, I think the U.S. market looks pretty good.
Michael Tyler of Eastern Bank Wealth Management says the U.S. market looking pretty good. A little optimism on this Wednesday morning, Michael. Thank you. We appreciate it. All right, on deck is the recent